This is Fintech Insider News. This week, Chase UK overtakes Monzo to become Britain's best-loved bank. Fintech investment has fallen to a 7-year low, and Lloyds partners with Doshi to improve financial literacy for young people. We'll be discussing all of this and more on today's show, so don't go anywhere.
Average is not invited. Not if you're holding your company off-site in Las Vegas. We aren't on friendly terms with the bare minimum, and unenthusiastic is uninvited. Las Vegas's creative energy and world-class hospitality want to bring your company off-site to crazy new heights. That's why fear-based leadership is afraid of Vegas, and boring won't be there, but it will be watching the meeting recordings later. Plan for the extraordinary at vegasmeansbusiness.com.
It's back. The 2025 edition of our annual Pulse Report, where we unveil and break down the best user experience financial services has to offer, is out now. Our experts have been busy researching and analysing product experiences from every corner of financial services, from crypto to inclusive design. Find out who were named our Pulse Stars, the best of the best from 2024. Read our highlights from the state of UX in the industry. And discover the bold predictions that our experts have made for the year ahead. Visit 11fs.com/report to download your copy.
Hello and welcome to episode 939 of Fintech Insider. I'm David Barton-Grimley, Fintech Strategy Director right here at 11FS. And in the week where the White Lotus returned to our screens, I'm joined by my own glamorous panel to unpack all the scandals, stories and gossip, not from White Lotus, but from the world of fintech and financial services. But unlike White Lotus, we promise no one will turn up glamorously dead, probably, hopefully. That would be nice. So first up on this week's pod, we have a Fintech Insider debut for Daniel Rose, CEO of Doshi. Great to have you with us, Daniel. Please tell our listeners a little bit about yourself and Doshi.
Well, great to be on a pod. I'm Daniel. I'm the founder and CEO of Doshi. We are a gamified financial education platform, and our mission is to work with financial institutions of all shapes and sizes and support them on helping their members or their customers to become more confident with their finances.
Awesome. Welcome on board. And next up, we have a welcome return to the pod for Daniel Lanyon. So we have two Daniels on the pod today, so it might get confusing. Co-founder of Tramlines. Great to have you back on the show, Daniel. How are things going?
Things are going wonderfully, and it's an absolute pleasure to be back with you guys.
Awesome. It's great to have you back. And last but not least, it's another familiar voice to regular listeners. Ruth Fox-Bleider, General Partner at Fox Capital. Thanks for joining us, Ruth. How are things with you and at Fox Capital?
Things are great. Thank you very much. Yeah, lots of very exciting early stage venture deals.
Oh, very exciting. We've got some news around that coming up. So we have a panel. And now on to the news. And our top story this week, this one comes from The Independent, and I'm sure many more. Bank overtakes Monzo to become Britain's favourite. And I'm sure you can imagine which bank that is. The charts are in, and we have a new number one. Chase, that's right, Chase, has officially overtaken Monzo as Britain's favourite bank, according to a new CMA survey, with 81% of customers recommending it, just ahead of Monzo's 80%. Chase's rapid rise through the rankings is notable, having entered the UK market in 2021, backed by US megabank JP Morgan. Digital banks dominate the list, with Starling ranking third overall, while Monzo remains the highest rated for online and mobile banking. Traditional banks struggle, with Royal Bank of Scotland RBS once again at the bottom, with only 46% of customers likely to recommend it. So what do we make of this panel? I mean, the difference between Monzo and Chase is only 1%. Let's face it. That's pretty tight, right? Who wants to come in first?
Sure, yeah, happy to. And just to be a stickler, it's 1 percentage point difference. But
Yeah.
but yeah, I think it is really interesting. I'm not that surprised. I think the big context here is the cost of living crisis. I can't remember exactly the figure, but it's something like 39% erosion of spending power in terms of the aggregate inflation level seen in the UK since 2019. Obviously, the big difference between Monzo and Chase is the rewards program. I've got lots of friends who absolutely love Chase, use it for all their spending, simply for that 1% cashback feature, which, okay, it's not huge amounts of money, but it makes a difference, I think, to a lot of people. I think that's probably what's driving it. I'm a big fan of Monzo. I also use Chase. I mean, I probably have a account with every single neobank, bank, and fintech app in general. I like both of them. If I'm completely honest, I use Monzo as my sort of go-to day-to-day spending for joint account, savings, and my own personal spending. I love all the features. I think Chase, beyond the cashback feature, does actually appeal to people from a feature perspective, in the sense that it's actually just incredibly simple. It doesn't have all the bells and whistles that Monzo has, but it's very, very simple and well-designed UI. I think that also is an appealing factor for some people.
Yeah, or Revolut, which looks like something like some kind of dashboard of the entire phone inside your app.
The Star Trek Enterprise, yeah, exactly.
Absolutely. Ruth, what do you think?
Yeah, I think that it's interesting. It's the kind of common challenge of fintech in general. And, we're talking about players that are actually, these are our legacy neobanks now, right? Like they've been around for a while. But nonetheless, it's easier to be a fast follower sometimes than it is to be an innovator. And so what we've seen across fintech, whether it's wealth management, banking, insurance, is that there have been some really interesting entrepreneurial products, some of them very, very, very successful, that have initiated new ways of doing things, which have, brought greater customer centricity and really addressed customer needs in the way that customers today expect to be addressed and communicated with, and have the usability that, we find very familiar if we're using other kinds of apps. And, these things can be quite innovative, but the bottom line is they can also be fairly easy to copy. So when you have the advantage of cost of capital or other sort of infrastructure balance sheet, and you can kind of get your act together and sort of get a digital program up and running and offer customers some of the same things, we see that customers find it quite appealing. And actually, the customer loyalty to some of the newer projects can drift when some of the incumbents are offering similar things. And of course, they typically tend to be able to offer much more of a spectrum of financial products and services. I think it is notable that it's also a new entrant. So perhaps people are just kind of sick of old stuff regardless. It's really interesting to see neobanks topping the list, except for, a very old incumbent that's also new in market. And, this, I think that it's really still remains very exciting for Monzo to be, 1% below JP Morgan Chase. That's still really, really impressive. So, but yeah, but this is a trend that we see. I think that in general, in venture capital and with the kind of what we're seeing right now in the generative AI revolution, there's just a lot of questions about how much intrinsic value software is going to have. A lot of this stuff is going to get easier, and I would expect to see, even faster fast following.
It's so interesting what you're saying, that they are playing both the incumbent card and the challenger bank card, which makes them almost kind of completely unique, really, in the world.
Well, people get sick of stuff, right?
Yeah.
And so, whatever's new, you're kind of like, I'll give it a shot. Let's see next year.
Yeah. Absolutely. And Daniel in the studio, it'd be good to get your perspective on the incumbent side of this, right? Because, we talk a lot about, the 1% difference between Monzo and Chase and all that kind of stuff, and how NatWest is lagging behind. But is this chart maybe kind of unfair? I mean, you work with big banking institutions. People have trust in their banks. I mean, I bank with HSBC, and yes, I have Starling, and that's great. But I'm not going to leave HSBC, whatever a ranking on some website tells me, right?
Yeah, I think there's some interesting points here. I think one of it is banking can be quite simple. I think that's one of the takeaways I have. I think if you are really good at executing and you have that trust, there is room to grow. And Chase has done it perfectly, right? They have the brand trust. they're a regulated bank, and they have some branding power, and they put something very simple together, and they were able to challenge with a very simple proposition some of the older challenger banks. And I think it just shows that it is about building a very simple, relevant proposition that customers understand. But I also think it gives hope to some of the traditional players in the market, like the Lloyds and Santanders and the Royal Bank of Scotland's of the world. Because what it shows is that if you are really executing on your product well, you can indeed perform and can move up the rankings. What Chase has done isn't massively innovative, but they're topping the rankings today.
Yeah, absolutely. It's very interesting. And in the past year, we've interviewed the CEOs of Chase UK and Monzo, Kuba Fast and TS Anil. So check out the show description for links to their episodes where they share insights on building customer loyalty and satisfaction. Okay, great. Really interesting. Now on to our next story. And this one is from Finextra. Lloyds drives gamified education for YouTube people in partnership with Doshi. Lloyds Bank has teamed up with Fintech Doshi to launch a gamified financial education platform aimed at young people. The initiative allows students to choose personalized learning paths, complete lessons and challenges, and earn rewards like gift cards. The platform also incorporates AI-driven interactive learning to keep users engaged. According to the report, this collaboration, born from Lloyds' Launch Innovation Programme, reflects a growing trend of banks investing in financial education and fintech partnerships. So, without further ado, as you all know, we're joined by Doshi CEO Daniel Rose on the pod. Daniel, congrats on the partnership. Sounds like amazing news. What can you tell our listeners about it?
Well, first of all, huge congrats to Lloyds as well. I mean, we're speaking about one of the biggest banks in the UK that have decided to partner with us. This partnership is really the first step of a kind of successive partnership that I can see, where we are first building out a proposition that's really designed to bring the next generation into banking, that helps educate through new ways and novel ways to build greater financial confidence. Just a backdrop on this, the way it works is that we offer anyone that joins a way to learn about things that they really care most about, whether that's investing, whether that's building my first savings account, whether that's preparing for college. So we have multiple ways how we engage our users, and then we gamify it with points and with rewards. And the ultimate goal is really to fast circuit that inertia when it comes to taking ownership over your finances. And the wider vision here, and I think going back to what Chase has done, it is to build a more rewarding relationship with the customer. And that's great that Lloyds really has recognized that. They've recognized that there's more to be done to be still relevant with a new generation. And we are now at the forefront of helping them.
Yeah, that's awesome. And how do you see, just more broadly, the impact of gamification on financial literacy? I mean, how important is it for the younger generation to go through these types of behavioral nudges or games to be able to learn something? It's so interesting.
Yeah, I think we've seen also with social media and other forms of entertainment. I think education has to compete with and has to stay relevant. And we think that gamification is a toolkit to build greater share of mind. And build greater relevance with other competing, things that somebody can do. And so we don't think it's the answer to everything, but it is definitely a way to incentivize and nudge user behavior. And I don't know if you know about nudge theory, but Robert Thaler, he's a pretty big kind of proponent of that. It's nudging really works, particularly in the beginning, to build a financial habit. And gamification is a great kind of mechanic that really drives that nudge behavior forward. So we see this as a great accelerator into a new forms of behavior. But I think ultimately what we have to deliver on is value to our customers. We can't just rely on gamification for it to work. We have to make sure that what we do is highly contextual, is personalized to user experience, that drives real value for our users. And this is where the AI comes in and helps then to bring in some of the more relevant moments where the financial information is really then personalized to that user.
That's so interesting. I mean, you mentioned actually before we started that you guys are using AI to power some of these experiences. I mean, you brought it up. It'd be interesting to know how are you using it?
Yeah, so I think that first instance, what we do is we really use it to tailor the experience to some of our partners. So AI is still a very much of a novel technology. We have to be very careful. We're in a high regulated space. So, just to create content at scale with using AI and let the AI kind of hallucinate is not an option for banks. So we use it as a way to in the first instance, to help ensure that the content is fully vetted, that the tone of voice is adapted to the client, that we speak the language of our core audiences. So in a way, it's almost curating it in the right way. That's how we kind of think about it. And then I think in the kind of second instance, how we think about it is like, how do we then use that? How do we use these new Gen AI kind of propositions to help then build even more personalization into the experience? In the first instance, that could be something like, making sure that people are seeing the right quiz questions and right kind of content pieces after they've learned something. In the second instance, I think where it could be really interesting is to then start to have some real life simulations around your finances. But we're kind of using a very iterative approach to it. We recognize that there are certain risk parameters that we need to adhere to. But we think it's a super exciting opportunity for us to really innovate here.
No, that's so cool. And Ruth or Daniel, I mean, I know that gamification is a kind of a big theme, right? It's one of those meta themes that sits across a lot of banking and in fintech. Lots of banks that I speak to are always trying to figure out, like, how can we get more nudges into our experience? I mean, do you see this as being a big theme in investing, Ruth, for example? Is there a category of gamified fintechs out there?
So I think gaming is obviously hugely popular, and young people spend an enormous amount of time on screens. I think what's really interesting about the way that they're consuming content and financial advice is really that there's such a big kind of sphere of influencers now, and this whole there's actually just so much competition for this kind of advice and this kind of I guess I would say just conversation. And so getting something that's a little bit more engaging, I think, sounds practical, maybe, given the kind of intersection of those trends, right? That, parents are more sophisticated about finance. There's just been this generational democratization of financial products, and there's a lot more choice. And, I think I'm certainly more sophisticated than my parents were about financial services products and all that kind of stuff. And consequently, I think my kids are probably more sophisticated at their age than I was. And so to the extent that you can kind of engage those young users and really provide them with a brand that they can latch onto, I think that makes sense. I'm very curious to hear how a more engaging user experience in the gamification element competes with the more passive way that young people tend to interact with content on things like YouTube and TikTok, where, financial influencers is just like a hugely popular class of influencers. And, but nonetheless, I mean, when I worked in incumbent financial institutions, it was always a question, how can we get sort of, younger demographics involved with us, and how can we build that brand loyalty and sort of brand awareness and trust earlier? And certainly, this seems like, no pun intended, an interesting play in that space.
Daniel, what do you think?
Yeah, I do agree. I think the main difference, I think, with passive and active consumption is that when you actively consume, you also there needs to be a clear value exchange for that. So right now we are using a reward-based mechanism to kind of have a clear value proposition. It's very simple. You engage with your finances, and you get something in return. You get rewards from your banking institution. So I think that's a very we might evolve that over time, right? The value proposition. But I think the point here is that we need to make sure that there is a clear kind of value proposition as opposed to passive content. I think the other thing, and I think this is the other point why financial institutions want to work with us, is because they recognize that there is a danger, there's a certain degree of danger of just listening to influencers. It's completely unregulated advice. There's some of them are fantastic, and I'm not advocating against influencers at all. I think they have a space, and thank God they're out there to promote financial literacy. But I think it's also presents an opportunity for things to have unbiased financial information out there that is also and that is also kind of interactive and entertaining. So, but yeah, so I think we are quite bullish on obviously what we've created.
Yeah.
We think we can create real value for institutions, and but it starts with having a clear value proposition.
Daniel L., final thoughts on this?
I'm a big fan of gamification in financial services. I think it can play a really, really useful role in both educating and building good habits with people's money and how they use it. I think it can also be a potential, pretty big pitfall for people's overall financial health. So I think the devil is in the detail. And I'll give 2 examples. So specifically, I think, ClearScore, for example, is brilliant at building a sort of gamified improvement to how people think about their debt, their credit score, etc. And I think what they've built has been amazing, and I use it all the time, and I enjoy sort of checking my credit score. It sounds incredibly sad to say out loud, but regularly, and sort of looking at what I could be doing better, and obviously getting nudges. Whether it's being on the electoral roll, etc., etc. So that's I would point to a really clear, no pun intended, example of a good gamification. I won't name any names, but something that's always troubled me a little bit in the digital wealth space is how the democratization of personal investing has sort of been how terms like trading rather than investing, for example, have been popularized. Most people shouldn't be traders. You shouldn't treat your pension as a trading account. The ideal amount of time to look at your pension performance is probably twice a year max. You shouldn't be looking at it every day, but there is a temptation in product development to think about, North Stars, like how many times do people log on to the app? How could we improve that? How could we make that, that's clearly just not a good thing. There's an apocryphal, and I really underline apocryphal, i.e. probably not true, story about accounts at Fidelity. So obviously massive investment house. And there was this, I don't know if it's true or not, but it almost doesn't matter because it almost certainly is true that apparently their sort of top decile investment cohort, there was a very high instance of people being dead or had lost track of their accounts, i.e. they weren't checking in on them. They were just letting the market do the work in essence. And I guess what that kind of underlines is, my point on, you don't necessarily want to gamify people, for example, to be looking at their investments every day. What you want is to fall back on the common sense wisdom, which you can find in, anything by Warren Buffett or Charlie Munger. And yeah, not necessarily play around too much with that sort of thing. So I think similarly with your personal banking, you want to obviously have a lot of transparency in what you're spending and what you're, where you are if you're in your overdraft, for example. But at the same time, just being completely obsessed about checking your balance and all these sorts of things, it's no way to live. So,
yeah, it's not healthy. And that, I echo that as well, just personally with some of the fintech things that I use. And, I think a lot of what you're saying resonates. Things like Wall Street Bets, for example, try to figure out how we could get more people, I suppose, to be spending like that is not necessarily a good thing. I also love, Daniel, how you went very White Lotus there. I think it's brilliant. And on that note, we're just going to take a quick pause here. Back shortly.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's vanta.com/insider for $1,000 off.
Would you wear the same shoes for every occasion? Or rock the same outfit 7 days a week? Of course not. Your style is better with options. Your investments could be too. Cboe Index options give you access to various contract sizes, global trading hours, and potential tax advantages. That's a good look for any portfolio. If you're ready to invest in style, head to betterwithoptions.com. There are risks associated with Cboe Company products. Review the disclosures and disclaimers at cboe.com/US_disclaimers.
Welcome back. Before we return to the news, we wanted to tell you about our latest Insight show. For many in our industry, M&As are like the financial world's version of a major football transfer. So we've assembled an expert panel to explore how recent M&As have shaped the banking battlefield and what their future impact on financial services might be. It's out now. Just head to the podcast below this one to listen. Right, back to the news. And our next story is from FinExtra. Global fintech investment falls to a 7-year low. KPMG's biannual Pulse of Fintech report paints a sorry picture for the global fintech sector in H2 24, as both fintech investment and the number of deals fell to levels not seen since 2017. That's not good. Investment got worse as it went along, with H1 posting $43.9 billion versus H1's $51.7 billion. But it grew by $7 billion between Qs 3 and 4, so I don't know, maybe not all that bad. Both M&A deal value and VC investment rose quarter over quarter as well. So broken down by region, the Americas attracted the largest share of fintech investment in 2024, with $63.8 billion across 2,267 deals, of which the lion's share was in the US. EMEA was next with $20.3 billion, so quite a big gap, and APAC region drew $11.4 billion, so a big gap again then. At a sector level, the payment space attracted the largest share of investment, followed by digital assets and currencies and regtech. So, Ruth, I'm going to come to you first on this. That's not great news, right?
I think it's great news.
Okay, that's good.
Yeah. No, I don't think that there's... Look, venture capital is like you're searching for miracles. It's a game of exceptions. You're looking for enormous swings, and there needs to be, a graduation rate between each fundraising that is not 100%, because we know that, the more capital you raise, the more painful it is to have kind of no outcome. And the majority of startups are not going to IPO. Or be acquired. And so there's really interesting things that happen in a kind of market bubble, lots of experimentation. I would say technological advances are enormous, but it isn't super healthy. And I think that where we're getting right now, I'm seeing far more interesting companies, more cash-conscious entrepreneurs, entrepreneurs who are taking real entrepreneurial risk, not just kind of leaving a bank and paying themselves the same salary and doing a project. Like that's kind of no way to run a startup. So I think that what we're going to start seeing, there's a technological backdrop, which is super, super interesting. We're kind of living through a new wave. And that combined with, perhaps a little bit more scarcity around funding, not a dramatic huge amount of scarcity around funding, but just, some pumping of the brakes and seeing if prices are rational, projects are rational, the traction justifies the multiples, all those things. For me, that's just like a healthy market correction. It's not a problem.
Yeah, that's good. That's good news. Daniel L., any thoughts?
Lots of thoughts. I think this is a complex one with lots of factors. I think on the one hand, I agree with Ruth, actually. I think it's a good thing because, what goes up must come down. Fintech can't be the standout category for venture capital dollars forever. That would be impossible. I think obviously you've had some froth come off of the fintech market because of the rise of AI. That's become a standout category, and that's an opportunity cost that investors have to make. I think also, there's a really bullish sort of undertone to the numbers as well, in that, if you look at the amount of revenue that fintech companies, as an aggregate, as a sector, have generated, that's probably never been higher. Like that almost certainly demonstrates that fintech has arrived and has reached something like a steady state. It isn't just a zero interest rate environment driven phenomena. It's a permanent sort of part of the financial services landscape. I guess that's always been my bull case for fintech, that it reaches something like biotech in that there's a sort of outsourced R&D for healthcare and pharmaceuticals with biotech, but you still get some breakout companies that make it onto the Nasdaq and become the next Moderna. Maybe not the best example these days, but yeah. So I think that there is some positivity there. A really big important factor in these numbers is also the bearishness for consumer fintech. We obviously are seeing exciting new founders come through with great ideas in the consumer fintech space. But really, most of the dollars have been moving to on the B2B side for quite a while now. I mean, obviously, the big Revoluts, Stripes, etc. They've continued to attract lots of money. But we haven't seen the same replication of the excitement that we did in 2016, 2017, 2018 with neobanks, stock trading apps, etc., etc. I think that is because that disruption really was quite huge, as we talked about with Chase and Monzo. We haven't had a new wave of really, really exciting consumer fintech come through, or a new sort of paradigm. I guess AI would be the obvious place to look for that, but it hasn't quite arrived yet. It will come, absolutely. Everything is cyclical, particularly in financial markets. But yeah, we haven't quite seen that yet. I think when we do, we'll see a huge growth in VC volumes going to fintech.
It could be the next wave. And I mean, you mentioned AI. I feel like I should ring a bell every time someone mentions AI, including myself. But I mean, definitely AI is one of those areas where, financial services, particularly incumbent financial institutions, you've got sort of big, crunchy workflows and, human-led processes and whatnot. You can imagine it's just such an open place in some cases for disruption. Daniel in the studio, I want to come to you as a founder, right? And you are also in this industry as well, and be someone who has integrated AI into your service. I mean, how do you see this news? Do you see a positive road ahead?
I do think so. I think it's great to be a VC in those times, obviously, because you can buy into very low multiples, and that's probably the best time to invest. But I also think it's not I think what we're seeing, and at least what I'm seeing in my community of founders, I think there's a lot more of a sober view of what the VC game is about. It's about finding, again, as Inars said, it's about finding companies that need funding to reach escape velocity in terms of growth. And a lot of the companies that were funded in 21 just weren't those type of companies. And as a matter of fact, I strongly believe that there's a lot of really great startups that can be running very efficiently, that can be optimized to perfection, that can be profitable with very little capital and very little human capital as well. So I think we're entering an age where you can see 5, 6, 7 person teams that can build profitable businesses, sustainable businesses that don't need a lot of VC funding potentially. So I think there's definitely a shift in capital allocation. There's also a shift in founder mindset in terms of what constitutes a great company. And what does it take to build a great company? So I think these are all really good trends. And again, I think, without having to mention AI again, I think it is the underlying driver to a lot of these kind of shifts in how we build and operate businesses.
Yeah, it's such a fascinating discussion, everyone. I'm sure we could be talking about this for hours. And on to the next one. Right. And this one is from Fintech Finance. Ethiopia's Dashen Bank partners with Accion, I'm not entirely sure how to pronounce that, with Accion and Mastercard to connect small businesses to the digital economy with the new innovation hub. Dashen Bank, one of Ethiopia's leading private banks, has partnered with global nonprofit Accion and the Mastercard Center for Inclusive Growth to better serve smaller businesses. Accion is supporting Dashen Bank to build an innovation hub that aims to expand digital banking services to micro, small, and medium enterprises, MSMEs, through a range of new products and a focus on women-owned businesses. Dashen Bank was one of the first banks in the country to launch a digital wallet and help small business owners make frictionless transactions. Now the bank aims to develop new solutions embedded in existing supply chains for MSMEs in Ethiopia that still largely transact in cash, have few assets, and as a result remain largely invisible to big banks. The Innovation Hub is one of 6 strategic pillars in the bank's strategy to support MSMEs in the region. I think maybe one way of framing this discussion is to talk about the unbanked, particularly in sub-Saharan Africa, right? I mean, we know that there's just been so much progress over the last, decade, 2 decades in digital wallets through things like M-Pesa, for example. Progress is being made, but obviously there are still huge gaps, right? Particularly when we talk about lending to SMEs and to MSMEs. Ruth, I'd love to come to you first to get your thoughts on, where are the major kind of jobs to be done or kind of open unmet needs in the area where ventures can launch.
Yeah, and I'm not sure if it's always going to be ventures. I have invested in a company called Ijara, which is an investment and savings app focused on Francophone Africa. And it, has a kind of digital assets component to it, which is really interesting because for companies that whose fiat currency fluctuates in value dramatically, stablecoins have become a very, very important mechanism for stabilizing wealth and also for transacting remittances. And so I would say across the board, there are opportunities. I think that the focus on women, the focus on just the obvious differences in the demographics in the global South, is very poignant. We have an extremely young population. A lot of the work, as the article mentions, is transacted or paid for in cash, and even kind of some of the mechanisms for saving money are quite sort of communitarian and old fashioned, and really don't allow people to build wealth in a modern way. And so there are huge opportunities, enormous opportunities in terms of the sheer number of potential users and just the unmet needs in the area. Of course, funding to Africa kind of ebbs and flows. People's interest in sort of backing some of these projects with venture capital dollars ebbs and flows. And I think that, there's also things like corruption and political instability and just lack of knowledge of the region, which sometimes prevent investors from being comfortable investing. Of course, there are many firms and sort of subsets of firms that have specific mandates around investing in Africa and in emerging markets, precisely because of the enormous opportunity set associated with this younger population and all of these unmet needs. Historically in fintech in the olden days, we've always talked about leapfrogging and the way that specific populations that really have absolutely no infrastructure have a tendency to sometimes build more interesting infrastructure solutions based on more contemporary technology than sometimes it takes us when we have kind of legacy technology and sort of incumbent control of financial infrastructure. So there are always those opportunities. These projects are really also super interesting just from the perspective of allowing people to participate, more people to participate in the economy, build wealth and also have just a contemporary approach to economic opportunity. So I am very interested in these types of projects, and I think that they can be really fruitful.
Yeah, amazing. I mean, huge opportunity, but also fraught with pitfalls, as you say. Daniel L., what's your view on this?
Well, I've got to confess to having never made any investments in Ethiopia or across the African continent, but I have been a few times, and it's a wonderful place. I think the demography is incredibly exciting if you're taking a sort of long-term market view. I think Ethiopia is one of 8 countries globally that is going to be responsible for 50% of population increase over the next 30 years. The smartphone penetration is over 60% and growing at double digits every year. There's clearly huge opportunities to serve both customers, personal banking customers, as well as SMEs. And I think, it sounds like an incredibly exciting initiative. Really cool.
And some of those gaps and sizes are phenomenal. I mean, so if we just look at the Ethiopian SME market, only 6% of micro enterprises and 1.9% of small enterprises in Ethiopia have access to formal credit. And look, I imagine there's variance across countries in sub-Saharan Africa, or even Saharan Africa for that matter. But I imagine they're very, very, very low, right? The financing gap in the MSME sector in the country is estimated to be something like 4.2 billion. And, we could just go on and on and on, right? I mean, 39% of women compared to 55% of men have access to an account or a formal financial institution. So these kind of needs are pretty huge. And Daniel, in the studio, I just kind of wanted to ask you, because there is a huge financial literacy component to this as well. When we talk about the unbanked lacking access to basic services, well, when it comes to things like taking out debt or making investments, there surely is a play for what you're doing in countries like Ethiopia, I guess.
Yeah, 100%. I think there's definitely also a community angle to this. I think that in those particular countries, community finance is a massive is a massive way of financing, and I think using education as a tool to promote better financial outcomes through a community-led kind of engagement model, I think is a really, really interesting way to do it. I mean, the other thing I think you've said it already. It's a digital first country, right? So you can really. I think here we're talking about often in the UK when I speak to some of the stakeholders, they're like, "Oh yeah, we love going to schools and we love kind of doing these like in-person workshops and we love kind of giving out these presentations and these leaflets and stuff." And I think it's just interesting because when you go to Africa, it's all about mobile. It's all about kind of how do you scale digital. And there is a really interesting, there's some really interesting kind of ways how you can hack scalability through community, through mobile. And so yeah, absolutely. I think if we were to take bets ourselves and where we want to grow, emerging markets and particularly, East Africa would be definitely one we would like to take in the next, I'd say 2 to 3 years.
Awesome. That's great to hear. Yeah, let's see how it goes. All right. And now for a quick look at one more newsworthy story this week that we don't have time to cover in full. And this one is from Fintech Finance. eToro files for US IPO, reportedly eyeing a potential $5 billion valuation. Social investing platform eToro has officially filed for an IPO in the US, making a significant step towards going public. While details on share numbers and pricing remain unknown, reports suggest the listing could value eToro at about $5 billion and take place in Q2 2025. This move follows a previous attempt to go public via SPAC in 2021, which was later scrapped. The IPO trend among fintechs is heating up, with Klarna also pursuing a US listing and companies like Chime and Tabby exploring their own public debuts. I mean, I think sitting in the UK, a lot of people will be thinking, this is yet another example of a company not choosing to list in the UK and choosing to list in the US. But of course, eToro is not a British business. They were founded in Israel and Tel Aviv. So I'm not entirely sure how relevant that is. I mean, eToro as a business has been, I think, a little bit up and down over the years. So, they've made money, they've lost money. It's probably in the valuation that you see. So yeah, I absolutely agree. I think we are in IPO season. People need to cash out, right? It's been years. You can see they already tried once in 2021, and this is the next way forward. All right. And now we're on to our final segment, and finally, and this is from Fintech Finance. Nearly 1 in 10 Brits rely on YouTube for financial advice, despite only 26% believing it's a trustworthy source. I think this is what you were talking about right earlier, Daniel. Now, new research from credit card brand Accion reveals that nearly 1/3 of Brits, that's 30%, say financial mistakes have caused them stress, while 41% feel negatively about their financial situation. With financial well-being a growing concern, the study explores where people turn for financial advice and how much they trust these sources. Financial advisors remain the most trusted, with 80% of Brits valuing their guidance, while TV shows like the Martin Lewis Money Show also rank highly. Meanwhile, social media is becoming a go-to for younger generations, but trust remains low. So where should people be getting their financial information, and what roles do fintechs play in educating customers? Daniel, I have to come to you first on this.
I mean, it's a really good question. I think I'm not going to advocate that financial institutions should provide financial education. I think that's ultimately what that is not their main purpose. The purpose is to give access to kind of financial services and credit and so forth. But I do think that they have a really significant role to play here, because what we see here, and unfortunately, it's getting aggravated with the current political sentiment in the US. I think it sounds like it's okay to lie, and it sounds okay to advocate for things that aren't necessarily true, as long as it's clickbait and as long as people listen. And I think that trend is, in my opinion, very disturbing. It's not the right, but it is what we're seeing, right? So I mean, I think this is where the statistic is so interesting, because in one hand you're saying that one-third of the YouTubers, they do listen to financial advice, but then equally they don't recognize it as trustworthy. So, and I think that's really where we see these really disturbing trends coming through. I do think that in the ideal case, it's the role of government to kind of mandate some sort of standards across Europe, across the US, across Asia, globally, really, and then for the education system really to take up this as a priority. Right now, STEM is literally what you get tested on, and there aren't really any outlets that, unless they're private institutions, that really push for this. And I've seen this firsthand. We started going to schools, we started to kind of advocate for budget, we started to really try to make inroads there, but it's just a really archaic way of doing business. And the education system needs to wake up and realize that there is a role to play, but that starts with government. So I do think that for-profit institutions like banks have this really amazing opportunity to play a bigger role here. So my hope really is that we come to our senses and start to really mandate these things, because otherwise we'll let social media dictate what we think.
Yeah, and maybe just stop people from just using YouTube as a default. I mean, I hate it. How much of this is just a function of YouTube as being the channel at the moment that people default to when they need this kind of advice? And then I suppose the following question from that is, at what point does ChatGPT or these models then flip that, right? And so a classic example of that is, I don't know, if I want some advice on, how to take something that's been prescribed to me at a pharmacy, before I would, I don't know, go on YouTube or Google. Now I just ask ChatGPT, and it just tells me, in a way that I understand, and in a way that is good, but also in a way that it is unauditable as well, to a certain degree. So is this a function of just the default channel people are going to?
Yeah, I think so. I think what ChatGPT cracked was this easy way of consuming information and interacting with information. I think that is absolutely being a game changer. It's for us, it's a game changer as an organization. But again, I think if you build this right with using AI, I think there's an amazing opportunity, right? Because you could build, we're doing a story today. We have a single source of truth. You don't have to rely on internet data. You can build your own kind of repository and you can actually collaborate with organizations with that. You can collaborate with educators, with institutions, and you can really build out what is the truth around your finances and how do you actually educate. And then you can use AI to then start to build out the right mechanics to build that the user experience for the user. So in that sense, I think AI is fantastic. Right? It's a fantastic tool. It's just how you use it and making sure it doesn't hallucinate. But as a technology, I think it's great because you can now do all sorts of things on how to make education more entertaining.
Awesome. Ruth, Daniel L., Final thought?
I'm a bit more cynical. I mean, I think people are turning to YouTube for advice because they're finding it entertaining. I think truth has kind of like left the building. No one gives a crap. Good luck with governments like legislating truth. Like they're kind of full of it at the moment. I think that generally we need to provide people with a good education system and a public education system, since the vast majority of people, are educated in a public education system, and let them, figure out what's true and what isn't. And I think that also we kind of can't condescend to people. Like a lot of people watch stuff because it's entertaining and they know that it's BS. And so it's kind of, I think that there's the question really is, do people have access to wealth and to building wealth in the first place? Can they get jobs? Can they get good paying jobs that sort of they can do with dignity and have a good paycheck from? And then the financial choices that they're making, do they have the kind of credible level of education to be able to assess maybe what makes sense for them and what doesn't? But I'm a touch pessimistic this week. I don't know.
Love it. I love it though. Daniel L.
Well, as a financial journalist of 15 years turned VC, I mean, unsurprisingly, I am very, I'm very of the opinion that financial education is good. However, I think there's quite a lot of detail there, which it's an easy thing to say, but what does that actually mean? I think that obviously it's hard to argue against finance should be, and money management skills should be taught in schools. But the reality is, kids don't have money, so they can't really learn. And I think, investing, for example, is a real world activity. You sort of have to learn about it by doing it. And a lot of that is about learning, about yourself. The reality is that everyone is subject to the same biases and wishful thinking, and a lot of the fallacies that people can fall into, for example, when they start investing. And it's great that there are more opportunities to invest now, at lower price points, for example, with less jargon, less friction than ever. But I think that the devil's in the detail there.
Maybe one point here that I think is interesting about there's I completely agree. I think there's the devil's in detail, but there's also, and I 100% agree, you need to make mistakes to learn. But I think there's also something around simulating your potential outcomes, and they're simulating how you can make mistakes, and I think that is quite interesting nowadays. I think with virtual, again, it started with gaming, with virtual, with paper trading, and with kind of game-based or scenario-based learning, I think you can show the user how to think through their finances, so I think there are ways to do it, but I think generally I do believe that ultimately it's about putting things into practice and actually making those mistakes yourself.
Yeah. It's got to be done properly. And just on a final word from me, I absolutely do watch videos that I know are bullshit. That wraps up this week's Fintech Insider News. Thank you so much to today's guests. And where can people find out a bit more about you and your companies? Daniel L.
So you can obviously look me up on LinkedIn. These days is the best place. Do also check out tramlines.com. And you can add me on X, but I haven't posted there for a few years. So whatever.
Daniel R.
You can shoot me an email. Very old school, Daniel@Doshi.app. You can also, join Lloyds or join other institutions to be part of what we do. And you can also find me on LinkedIn.
Awesome. And Ruth?
Yep, you can find me on LinkedIn, or you can check out our Substack, Fox News Substack, and sign up for our newsletter, Fox News.
Awesome. And as for me, you can find me on LinkedIn. Thank you so much for listening to today's Fintech Insider. If you like it, if you like what you heard, please make sure you follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks again and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alika Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.